Federal Reserve Chair Jerome Powell said today the Trump administration's tariffs have delayed a planned cut to interest rates so far this year. Speaking at the European Central Bank Forum in Portugal, Powell spoke about the reasoning behind the Fed's wait-and-see approach.
In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more.
For more, CBS News MoneyWatch correspondent Kelly O'Grady joins us now here on set. And Kelly, so what else can we get out of that in terms of when we could see a cut?
Yeah, I mean, I think what was really interesting about this today is he affirmed, hey, we would have had an interest rate cut if it wasn't for the wild card of these tariffs. And so a lot of people are wondering, we've got a Federal Reserve meeting coming up at the end of July. Are we going to get an interest rate cut? I can tell you, I just checked right now. According to how investors are betting on that, that is unlikely. The most likely time we would see an interest rate cut is in the September meeting. That doesn't mean that you don't have proponents at the Federal Reserve Board of Governors who have come out and said, hey, we think the economic data says that we should get an interest rate cut because we haven't seen the inflationary impact of tariffs. Chair Powell, though, is saying, well, we need to wait. We need to wait and see over these next few months. The only thing, Meg, that I think could tip the scales when it comes to a July interest rate cut is how the jobs report comes out this week. Comes out on Thursday. If we see material weakening, I think that would put the pressure on Powell to move that interest rate cut up.
So that's something to watch as we wait and see again.
Yes.
So we do know that the minimum wage went up in 15 states. What does that mean for people at that scale?
So very simply, it does mean that they are going to make more than they did per hour. And there are a few cities that we can throw up and show you. In Chicago, you're going to tick up to $16.60 an hour. That's an increase of 40 cents. Los Angeles, $17.87. Washington, D.C. is seeing an increase of 45 cents, and it's going to hover right at $17.95 an hour. What that means, though, is the folks that are making minimum wage, sure, this is better than it was. I don't want to undercut that. But a lot of those folks are in such a financial situation that they have to work multiple jobs. This doesn't make the difference that they're going to be able to say, hey, no, I'm good. But you think about the flip side, higher labor costs for companies on top of all of the other costs that they are seeing, that will often tip the scales for them to maybe do layoffs, turn to automation. With every economic impact, there's always a yin and a yang. So, but definitely if you're in one of those cities, you're going to see a little bit of a bump in your paycheck.
In expensive cities, too.
Yes.
To live. Kelly O'Grady, thank you very much.